Good morning, everyone. Welcome to the London session. If you're here for the first time, this is TopstepTV. My name is Deeyana Angelo. I've been trading for overall nearly 17 years, and for the last sort of 11/12, almost 12 years, I've been a futures prop trader. And yeah, so I focus mainly on commodities, crude oil and gold, sometimes copper and platinum. So those are my main markets, but I do dip my toe in at the end of the day into some ES trades as well. My style of trading is comprised of four different, let's say, pillars of orientation points and situational awareness and a whole bunch of other things. Now, I hope everybody's had a good Labor Day. We don't celebrate it in the UK. So therefore, we did have the London session yesterday, and I did trade. Who's we? I got a pretty good trade in crude oil. So yeah, that was like one trade that I took, just literally going in pretty hard actually, because it started to push, and I saw some things on the time and sales and bookmap happening, and then I went into a one position scaled into 7, and that's why you have so many trades here. But it was literally like all one trade, and then as it was coming up, I kind of scaled up, and that was it. It was pretty drama free and also conducive to the things that I've been seeing happening in crude oil. So let's talk about that a little bit. Right now I'm seeing something similar, so I may actually, because I'm getting close to the target here, I may just do like one lot here, and I'm gonna explain why I'm doing this. So for the last sort of, few weeks really, we've had Asia and or London making most of the moves in crude oil, right? And that's a little unusual. It's a little unusual. Whenever you have a market that generally should trade on its regular exchange hours, which is NYMEX, it's very rare to see extended times of the year where another out-of-hour session takes control. And this has been partly my challenge for this year. I actually locked up my live account for a long time to only trade the NYMEX session, because I didn't really want to mix sessions, and I wanted to have like limited screen time. In hindsight, that probably wasn't the best thing, because I started seeing these London moves, and then obviously my account would just be locked, and you know, I could have reached out, but I was still skeptical. I was like, don't know whether this is going to last. And then it just carried on for pretty much most of the year. So I'm now seeing these moves that are always doing the following: fake out for the first sort of 90 minutes in London, then a reversal that pretty much carries on all the way into the NYMEX session for the first sort of hour, and then you're in danger of a failed auction to the opposite side. So you know, they try to push it above the NYMEX initial balance, and then it fails. So I'm trying to just do like one trade from the overlap, and then kind of going into that initial balance. Now this is a pretty large candle that represented a reversal, so I may need to give this a couple of goes just to get a better entry if it doesn't turn around. But here's what we've got. So on the left hand side, I do have a 4-hour chart, and then on the right hand side, I have the same products, CL, on a 15-minute chart. Now I'm gonna look at the daily chart as well, just to see where we are on that kind of very, very large time frame. We are creating a bit of a staircase formation. So you have a drop away, then consolidation, drop, consolidation. And that consolidation that we've seen yesterday for the holiday is hitting the demand that was created literally last week. So we are kind of looking to to basically have a reversal yet again, and then a continuation at least up until about 74.43. So that's what I'm planning as my kind of first hypo. Now, like I said, there is a chance that we consolidate here and go somewhere closer to these lows. And in that case, I'm gonna try again. But I usually give myself about 18, 19 ticks of drawdown before I pull it off, and then kind of try again if the trade is still valid with a better trade location. All right, so we're getting to that point, so let's kill that. And now we wait for a better area within a range, because now we have a range. Is it a reversal or is it a range? It's something that I always ask myself. Sometimes you have these reversals that are very quick to go in the other direction, so you don't actually get much of a range. But when that third candle starts to dip into the middle, then you're probably better off waiting a little bit longer. So now I'm actually looking at 73.33 as my sort of loose area of entry, and I'm going to look at the dome to see whether we've got anything there. I don't really see much until 73.25, and that's pretty low down. I'm just adjusting the time and sales to filter by the sides of the contracts traded, because I don't really want to see like smaller players. Like, I don't, seeing people who are doing 1 and 2 lots, I'm not interested in them. I want to see bigger players, and they usually have, you will see lots of like 25, 25, 25, all contracts kind of in consecutive motion, and similarly 11, 11, 11. And that's all like basically the same player doing the same thing. So I want to wait until I kind of see them jumping in as well, because they will be the ones to drive the market away from this level. But for now, we have a range on a 15-minute chart, so we want to see whether we can get something out of it. Big buying wick on a 30-minute chart. So if I change this to a 30-minute chart, big buying wick. So a little bit tricky to find a smaller stop loss in this thing. So let's see if we can get down to that range. I mean, yeah, 73.28 might be interesting. There's a possibility that we go down to a London average session range low as well, which is sitting at 73.19. We actually reversed like just outside of that, but I was messing around with setting all of this up, so I didn't see that. Otherwise, usually that is my reversal point. We did open above London value and kind of smash through it, but because yesterday was it was a holiday day, so I never really look at the open sentiment post-holiday from the holiday day. It doesn't really make that much sense. Daily private life. No, Topstep does not have a way to set allowed trading times just yet. Don't know whether they're working on that, but I will be, I know they're having they're working on the option to lock yourself out for a certain number of minutes, but they still don't have like allowed trading times. I do have that on another platform where you can basically specify your allowed and unallowed trading times. But remember, guys, I have a live account with them. So for the live account, if you want anything like that, you call up the risk team, or you email Mick or Brett or Ben, and you go, hey guys, can you lock up my account like permanently from this time to that time? So whoever is asking, hey, what is the benefit of having risk managers, is the fact that you don't have to pay, an arm and a leg to get a separate risk management tool that could do that for you. And there is something out there for NinjaTrader, right? You can get a tool that does that. However, it's yet another cost. And if you're not really profitable in your trading, that's just yet another thing that you need to account for. But with the live traders, we literally have the control to lock up the account. Like, let's say that you're constantly seeing, you get to a live account and then you're constantly noticing in your stats that you're getting involved during lunchtime. So that's 5 p.m. to 6 p.m. my time. And yet you're constantly losing those trades. and that's harming your performance. Well, at that point, you can actually call up the risk team and go, hey, Mick, can you lock me out? But this is only for the live accounts. You can't do this in an XFA. You can request things like an expansion of the loss limit if you're trading really well in an XFA, even though I'm like, I'm a little bit not sure about that part. But yeah, obviously now we do remove the daily loss limits, but you can still have the loss limits in your funded accounts. So yeah, that is the benefit of being with the risk team. Or for example, you notice that at the Open, New York Open, you're constantly losing trades within the first 30 minutes. You can actually ask them to lock out your account just for those 30 minutes. So there are, huge benefits that they have these other risk control software that you can sort of ask them to do. And it's very, very customizable. But, so as long as you're in a Combine or an XFA, you have the basic platform that is pretty awesome. Well, I say basic, but to be fair, our live accounts don't have the stats. So actually, in the Combines and XFA, you actually have more stuff on that front end. But when it comes to the back end, the risk team has a lot more control. And they're very open to helping you out. That's what they're there for. They want you to succeed and all of that. Yeah, Dave's Power Live. I also use Guardian Angel Trader on Ninja. It's awesome. Oh, that's great. So Alan says, hi Dee, a few weeks ago I asked you how you manage risk on a new XFA. I decreased my DLL, divided DLL by 10, daily loss limit by 10. I just want to say thank you because I saw a big improvement in managing a new XFA. I wish I had the soundboard, but well done. That is excellent news. I'm so glad to read that. This is what we're here for, right? We're here to help each other. I'm here to share my experience of what's worked for me. And even though I can't, I don't do signals and I've never done that and I don't want to. And this is not a signal service, but there is education. There is experience that you can take things from. You can ask questions and then get benefit from that. So I can tell you that I've never had anyone who started an XFA on like either the maximum loss limit, because that's what we've got now, without some kind of a personal DLL for those first few weeks where you don't put a big dent in your account and you do make yourself stop because you set the personal daily loss limit, and then you get a buffer. And that part has to be slow. That first part, people rush the process. They're like, I'm going to make so much money now. And then smack, they're like $3,000 down on the first day. And they're like, boo. It's like, it's so difficult to start an XFA in a huge hole. Like, in Combines, you can do a reset. There's no resets in an XFA. Yeah. So the easier way to do it is if you can actually try to, if you can, I just realized I left my office door open. So just give me 1 second. Otherwise, my husband won't be very happy. Yeah, so because he's still asleep, he wakes up a little bit later than I do. So basically, if you avoid putting yourself in a massive hole in a new XFA, it's so much easier to actually get a bit of a buffer going and then do whatever you want, right? Once you have a buffer, you can increase that personal daily loss limit ever so slightly and keep it going, scale it up just like you would scale your contract size. So don't trade like a lunatic, and you can't. I think you can't because there's a scaling thing, right? So as soon as you get into an XFA, and in my opinion, what they give you as a scaling thing is actually still too big, because some people still go 3 lots. Like 3 lots, you can do a lot of damage, right? On a 150K XFA, a lot of damage. And people don't look at it that way. We see some of the big swingers, they're like 15 contracts, 10 contracts, 8 contracts. Just don't do that to yourself, And you're doing it to yourself. Nobody else is doing it for you. It's literally just you creating more problems for yourself out of impatience because you want to be rich yesterday. You want to get a payout yesterday. And, haste makes waste. That's what I always say. All right, let's have a look at the questions. Hello, Dia. I am from the US. The initial balance established in the London session, is it a valid reference for NYMEX session? No. So the initial balance that's established in the London session bears no relevance for the NYMEX session. So both of those sessions have their own separate first hour of trading that we use as a reference. Thereby, that's why it's so good for intraday, because once one session is done, you have a whole host of highs, IB high, IB low that you can now use all over again for the NYMEX session. But like I said, beware, because the NYMEX session has been very, how would I put it? All of the moves happen within the first sort of, 90 minutes or so. And that's very unusual, whereas in London now we have what we used to have in NYMEX, where you have, the first hour of trading, then they kind of extend it a little bit, then they might reverse it. NYMEX is like, boom, everything done in 30 minutes, and then it gets locked up with no follow through for like 30 to 50 ticks range. That's very difficult to trade any market. And this is one of the features of Forex. That's what Forex does, right? And it got so annoying to me many moons ago that I ran away from it. So now we have something similar in crude oil happening for NYMEX, but we still have London doing very nice moves. So yeah, entirely two different things. So initial balance for London, initial balance for NYMEX, two completely different things. So next question, what do you use to see how many contracts are coming into the market? Time and sales here, but I do have bookmap on another screen. So you can, if you're in Topstep, you can use the time and sales window, but if you're trading ES or NQ, that's going to be hard to figure out anything. This is why a lot of us, Nick for a Tick, Rips, a lot of us who do have for me, that's not like the core thing that I look at, but it's definitely a helper tool for me to see who is coming into the market and how big the contracts are and all that. So yes, time and sale is one thing, but bookmap is kind of like a visualization of both time and sales and the dome. So it gives you a heat map of where the bigger orders are. It gives you an idea when those orders start disappearing much better. And then on the time and sales window, obviously you have a lot of contracts that are real time coming into the market, where you have the big bubbles on bookmap that represent those, and you can actually put down like numbers of how big the bubbles are, as in like what contract size was traded there. It actually spews out a numerical number, so that's pretty good. SFT says, hey, good morning, Dee. Good morning. What would you recommend for beginners to learn how to do backtesting properly on ES? Backtesting should be taken with a pinch of salt. Now, backtesting is good if you're going to run a theory, and then you have, let's say, very simple, how many times does something reverse from VWAP? And then you go, okay, let's see when it got touched, how many ticks it would have required to reclaim it if it overshot it, and then how much did it move on average. So that is the kind of backtesting that I usually do, unless you're going to create like a mechanical trading system, which is a completely different ball game. The mechanical trading systems are usually about just getting the one condition, maybe up to 3 conditions, but trying not to optimize it as best as you can. Now, as discretionary traders, you can't be, like, I consider myself a systematic trader, but there's still a lot of discretion over when I will enter a trade. But my levels are always the same. My times of day are largely always the same when I enter the trades. The patterns that I look for, whether on bookmap or on the candlestick chart, either or, they are always very similar. So from that side, I am systematic. But whether I deem that there's enough juice in a trade or something, and when I will take that off, that is a matter of discretion. So with backtesting, I would not look at it from a point of view, oh, let's see how profitable I'm going to be. I will look at it from a functionality point of view. Does this level work? So that would be something that you can start doing. So for me, let's say I have an idea that London average session range low is going to cause a reversal. So now we see that today in particular, we've kind of got to within a few ticks from it, but then reversed. So it's like, well, is this trade now valid? But for me, here's the discretionary part. Yes, because we are consolidating above it, so this is still a valid trade. Now, I want to try and get a better entry location without having to use like whatever this is. It's like a million tick stop. I mean, 58 ticks. It's ridiculous. So I am trying to look at this as a range, and maybe once this candle is over, we can have another way to limit risk. But I was kind of hoping that this inside bar was going to bring us that push. Didn't happen. Consolidated, fell deeper into it. And then the only way I would have been able to enter this would be if I just guessed that it's going to turn into consolidation. But I don't like guessing. Again, that's the systematic part. So one of the things that I'm looking at now is whether we can actually close above VWAP as a sort of resolution to the equilibrium to the upside. If that happens, I'm going to have VWAP to limit my risk. So in that case, we hold above VWAP. I don't want it below it, right? So whilst this whole idea is framed around the reversal around London average session low, it's always a zone. Whenever you're doing back testing, you might say, well, it didn't actually hit the average session range low, ergo no trade. And in a mechanical trading system, this wouldn't be a setup. But in a discretionary system, you can kind of have a look at it. Well, yeah, I guess it's sort of reversed, and then find new orientation points. But you can't do that in algorithms. So the main thing of back testing as a manual trader should be, what was the move? What level did it come from? What sort of stop size would have been needed to survive that on your given time frame? What time of day did it happen? That's pretty important as well. So that's the function of backtesting for me. It's not about, how many times would have I made money on this, right? It's literally just looking at the functionality of the actual event. And then after that is down to your execution. So grab the experiential data from that sort of backtesting, and then we can sort of go back to kind of thinking about the risk model, number of trades per day. I mean, I see so many people doing 5, 10, 15 trades per day, all on like one single idea. So they get a lot of paper cuts trying to get into a single trading idea that doesn't end up working out. And then they're just sitting there going, now what? So I try to do on any single product. So if you're just trading one product, I try never to go over 3 trades per day on that particular product. If I start going 4, 5, 6, it means I'm not reading the market well. Okay, so D, do you wait for the 15-minute candle to finish before considering an entry? That would really be a case by case. Depends on what setup I'm looking for. So for example, if I'm looking for a breakout of the initial balance with a momentum trade, I don't wait for any candles. It's not a candle-based setup. It is a setup based on a breakout of a level, either an IB high or IB low to one side. And this will kind of tie into the next question, and into one of the questions actually. Because when you're doing a breakout trade, you're not going to wait for, if you want to get the best entry, you shouldn't really wait for any sort of a confirmation, especially not if you're trading NASDAQ. Because by the time that you get a confirmation, it's going to be like miles away. And then your risk is massive. Your risk is absolutely massive. All right, so we're seeing some 20 lots coming in here. So these are bigger players. Some slightly smaller players selling. But yeah, so now we have a potential for VWAP and a failed auction. So why do you talk more about the failed auction than the Weeb and Seeb setups in fast markets. Because the Weeb and Seeb setup, those are my concepts. This is somebody who's on the program, on the Market Stalker. They're going through the Market Stalkers method, and they've come across the setup that I call weakness inside initial balance and strength inside initial balance. The reason why I mainly talk about failed auctions in fast markets is because that is the highest probability setup for that time of day. Seeb and Weeb are really more for the later part of the day. So the final parts of the session, so final sort of 90 minutes of the session of any given market, which always has like a different closing time, Weeb and Seeb will become more high probability. And the idea behind it is that you have either an auction failed or auction fade or a failed auction that then sort of runs into the areas inside the initial balance that were created with quite some force. So usually you have either supply or demand in there, quite visible via like a bullish or bearish engulfing or an inside bar or something like that. But it's usually a lot of volume that was there. So as you kind of trickle towards the end of the day into the fade of whatever happened into that final 90 minutes, you run into these levels that were created with a lot of volume, and they are very difficult to break through. And then towards the end of the day, a lot of people will be taking off their positions. So yet again, another intraday reversal. And that's when those sort of setups, the weakness and strength or strength inside initial balance, are based on the idea that as you get to the levels that were created during fast markets, they have so much volume, they would take a lot of energy and a lot of orders to break through them, so price actually fails there, and then you have another setup. So that's why I don't really mention those much. If I was on Power Hour or something, I would probably mention my Seeb and Weeb a lot more. And the only time you would get those sort of setups happen during fast markets is when you have a slower fast market. So it's maybe when you have a quieter day, or you're not really, we don't have a strong auction, there's not a lot of volume, and they sort of run into an area, pull back into an area that was created slightly earlier. But those are oddities, right? They're not the norms. The highest probability setup for crude oil during fast markets after 10 a.m. Eastern, 9 a.m. Central is indubitably, the failed auction, right? That happens around 77% of the time. 77% of the time, when we try to break out of the initial balance, we will fail. But there are times of the year, like seasonally, when the initial balance breakouts and sustained movement in that continued direction is actually a thing on crude oil. So we actually have an algorithm that we run when I notice that. But here's the thing with algorithms. You have to have somebody who's essentially a quant strategist who will decide what is going to be switched on or off. Anytime you license your algorithm to any institution, which we have done in the past for my software development side, they will be the ones to decide whether they're going to run the algorithm or not. So you don't take any responsibility for, oh yeah, this is not working. Their strategists have to be the ones who say, guys, we have momentum, and this has been happening for a while. Let's run the IB breakout on crude oil now for this time period. And then when that starts to break down, they'll be, okay, let's just switch it off because we've now noticed a couple of weeks of that not working. And then let's go back to the failed auction thing or the reversal, of some sort. So it's this like myth that you can have one single piece of code that will always be performing. This is the problem that I have with signal services, right? Because they all bank on this idea, we have, this mechanical system that always works. It doesn't work. Like, it has to be an involvement from somebody, a human at this particular time still, who's going to make the decision of whether to run the algorithm or not. You can ask Robert Cooney about that as well. He only runs his algorithm when he notices that the conditions are right for that. He won't run it year long and just kind of let it do whatever. Like, that's like lunacy. All right. Cedric says, hi from France. Hello. Oh, Bruno. Bruno, aren't you French? My lovely moderator, Bruno, who takes care of us here. How do you set time and sale minimum contract on ES and NQ? The same way, if you're on Topstep, the same way that you would set it for crude oil. So, for example, you have this size filter. Look at that, size filter, right? And then you can just increase or decrease. So let's decrease this. And then you can get a whole bunch of cancerous retail traders going 1, 3, 1, 3, 1, 3. I don't care about that. Like, I don't care what like some dude down the road called Dave is executing one lot, on an ES contract, because they're not going to be the ones moving the market, right? So you want to filter the size to something sensible. Like, for example, you can see a lot of the big players around 10 a.m., bigger players, they're entering 32 contracts, 20, 39, 26. That's what you want to focus on. In crude oil, it's a lot less because, you're not going to have too many big players, and this is going to get bigger for the New York session as well, because there's going to be a lot of big players who are actively executing orders. Sometimes you can see orders like 300, 150. Pay attention to those. So the size filter is what you want in order to get any sort of a valuable thing out of time and sales. So compare that to where the large orders are on the dome, and then you have something. And that's basically the idea of Bookmap, right? That's what they have. And in crude oil, bigger orders are already from like 11 contracts. Olympus Mon says, morning Dee, I see you using 4-hour and 15-minute intervals and 30. I'd have that on another chart, but it would get too cluttered here. How long would you typically have your positions open for? Okay, so here's the thing. I usually keep my positions open for about 2 to 3 hours, but most of the time about 45 minutes. However, it depends on the product, right? So my DAX trades are usually never less than 90 minutes, and some of the longer trades have actually lasted for 4 to 5 hours. I got into a little bit of an interesting psychological spot this year with the whole TopstepTV and stuff. I kind of felt, being on fast markets, that I wanted to make my system and my trading a lot more kind of into a spectator sport. So I started to do stupid, silly scalps that did absolutely nothing for me. Because I'm not a scalper, right? I like my big D style trades that capture anywhere from 70 up to about 120 ticks per trade. And that's not a spectator sport. That's very boring. It's like, sometimes I started doing that recently, and what's been happening is that I run a trade during fast markets, and just one trade. Just one trade. And then, sometimes goes by, and then Andre goes, Dee, are you still in that trade? And Dee goes, yes. Okay. And then again, half an hour goes by, and Dee's like, Dee, is still trade open? Yes. But I tried to kind of make it into more kind of tradertainment. Let's do more trading. It's not really how I trade, and I've just gone back. I just don't really care anymore. If you find me boring, you find me boring. But that also means that quite a lot of the times I may not be in a trade because my level is not there. And, you might see me making, cash outside of the camera because we're only here for a limited amount of time. Out of all the hours in the day, I'm on for 1 hour for London, and then 3 hours for fast market, and then 1 hour for markets talking with Dee. So it's in order to get my setups, that's not going to be time dependent on when I'm on TopstepTV, right? And that's true for many other people as well. I saw some people who are talking about trade like KV, and they're like, oh, he never trades. Yeah, because he trades like 2 to 3 times a week. He is even more selective than I am. I usually trade between 3 to 5 trades per day. But on different sort of markets. However, right now I'm focusing on crude oil, and I've just literally thrown out everything else, and I'm focusing on my main product that I know has worked for me before. I know it really well. And, I'm also not trading that often in my live account. I trade maybe a couple of days in my live account when I'm extremely selective to get the correct times of day and everything. And that's been working out much better. So that's my trading times, trade times. I don't know what this combined, because I've been a little bit more aggressive on this, but let's have a look at my average trade durations. So even the win rate analysis, look at this. 1 to 2 hours, win rate is like 100%. Not that this has too much sample size in it, but 2 to 5 minutes, they are 50%, 10 to 30 minutes, they are like 25% of my trades. So overall, I lean towards those bigger, longer term trades intraday. Not longer term, that's the bad thing. They're just, I call them semi-swings. Because they're not really swing trades. Swing trades you have to carry overnight. But, semi-swing trades is like holding a position for several hours per day. And that's something that's worked for me for many years. I don't know what possessed me this year to try and change that. But, there we go. Make a decision, live with it, right? Yeah, boring trading is good trading, they say. That is true, but it doesn't make for very good TV. So that's a little bit tricky, because then we have to be, we have to be funny, we have to be engaging, we have to be educational, and then you also have to trade. Let's give it a go with another attempt here in crude oil. Why is this set to 80 ticks? Like, what the hell's going on here? These risk brackets are sometimes a little bit temperamental, so I don't know what is going on. So a couple of orientation points here that I want to see. I want to see us reclaim VWAP. We tried to go higher and failed, but a lot of wicks, right? A lot of wicks. So now I want to see that dedicated reversal, because even though we smashed through the London value area, we actually never managed to close any single 30-minute period inside it. So for my liking, this is still a value high reversal around from the average session range low, which was much lower down. Very spiky, very spiky. But yeah, this is the idea. If we get a little bit of traction, I might add to this, because I'm planning this to be held a little bit longer. And if I can maybe add another one, if I get some committed moves here, and if I see some bigger players actually stepping into the market, they're not here at the moment, but we'll see whether they can appear, and then I can maybe add to go along with them. All right. Simon Fasting and another level 2 data question. In the DOM, you have bid size and ask size locked. I can only see the current bid and ask. How do you get those rows with open orders? This is a question that we have every single day, guys. It's level 2 data, so you have to pay for it. It's $39 per month. The billing cycle is always on the first month. That's how data works. So it's not going to be on odd times. And if you let's say sign up on the 10th or the 15th of the month, they will still rebill you on the 1st of the month. So if you want to get level 2 data, these first couple of days of the new month is the time to do it. Okay, I'm going to do something here to maybe get a better average entry. So here's how you would add into the position if you have an idea. So I have an idea that this is going to be a value high reversal, so I'm going to add another one in a zone. And then if we fall down to the middle of this consolidation range, that's another add-in point for me. And then if we keep falling, that's going to be another add-in. But if we rise up away from this, I'm going to add an aggressive one when we go into profit, if that happens. But right now we have a consolidating area on a 30-minute or 15 and 30-minute charts. And I want to try and use that as a zone to scale into a trade. This is something that I do if I have a very clear-cut consolidating range. So effectively what Dolby does, but I have clear-cut points. So I have initial entry, middle of the range, bottom of the range. My stop loss placement stays the same, but as you kind of average into a zone, it effectively improves the risk that you're currently working with. I don't typically add, I don't pyramid in, because there's scaling in and pyramiding in, right? Scaling in, for me, means working within a zone to fill an entire position. And pyramiding in means going into more trades and adding size as the market moves in your favor. That generally doesn't work that well in crude oil because it's very whippy, and it doesn't really trend cleanly. It's a messy product. I have like t-shirts for my Market Stalkers merch where it says crude oil is slippery, and in fact I have a tumbler that says the same thing. Crude oil is slippery with our lovely Bob, the lizard, the ambush predator, the most unlikely ambush predator ever. So that would be one idea of how I would scale into an area. But again, I only do that when there's a clear-cut consolidating range. So rather than like Dolby, where he kind of snipes tops and bottoms of that range, I don't like doing that. Unless we have like a big range and the entire day is a neutral day type with initial balance extension to both sides. And I have, a pretty big thing to work with. But I will absolutely utilize a range to kind of get a better entry into the idea that I have. So right now the idea is longs after the fake out of London with a view that we hold the value high from London, which we wagged through, didn't manage to close any single 30-minute period inside it, and then tried to reclaim VWAP, and for now didn't quite manage to get enough momentum. So let's see if they pick up more orders and start pushing this in. But again, this is going to be a trade that I will probably, if it survives, I will probably keep this on for like 3 hours, 4 hours. It's not going to be a scalp. And I do scalp. Like when we have the appropriate market conditions, like a range-bound market, again, neutral day type, or a limited auction, I will absolutely scalp. Antonella says, good morning, Dee. I'm trading the break of London IB and Q. What is your opinion about this strategy? Let's have a gander at NQ. First on my main charting thing, which is away from the screen, but I have all of my charting tools from Blatek, which is my company, full disclosure. Yeah, I mean, that could work. NQ and ES have all been doing the same thing that crude oil has. They've been moving a lot for London. So that means opportunity. So their break of the initial balance range. Now you have single prints left behind. Don't touch, right? You have more space now for that. Anytime you leave a set of single prints and they remain, that means a possible trending move. So, that's a good trade. Well done. For now, what I will be looking for now is for NQ to create a second set of single prints. So I'm going to put NQ on one of these charts here. So the initial balance was all the way, let me do the 30-minute chart because I can orient myself better. So initial balance is this candle and this this reverse hammer thingy. Where is the rectangle? There it is. So initial balance, that's the initial balance. We had a huge candle outside of it. It created the single prints. That's the single print, this big candle. That would be a single print on TPOs. And now you have a little bit of an overlap between the two candles, which you can use to limit risk. Now, NQ is one of those products where you can add, but right now, those single prints are still on the profile. If we continue to create another set of single prints, in that case, you have a good trending day, and you would be waiting until that either slows down or it hits your target. Or maybe you have something like me, time-based stops, where you stop it out after a certain amount. So yeah, great trade. Nothing more to say there. That's excellent. All right, so let's see. Morning, Dee. Okay, I already answered that. Zav, hey. I can't seem to attach the cumulative volume profile you have attached on the right side of the chart. Do I need level 2 to do this on Topstep X? I have no idea, actually, because I always have level 2, and I've never thought about that. I wouldn't think so, because I think level 2 data is the real-time orders in the DOM. Volume should be available, but I just wonder whether you're not using the right thing. So there are 2 volume profiles. So if we go to indicators, if I can ever learn to click this bloody button. What is going on? Hold on. I'm trying to click indicators and it's not. Oh no, sorry. My eyes are going, so I'm clicking on the wrong area. Okay. D, get some reading glasses. So you have volume profile fixed range. Now, again, I'm typing in wrong areas. Volume profile. So look at this. There's two of them, okay? Volume profile visible range and volume profile fixed range. Now, I don't know which one is which. I think the volume profile fixed range is the one on the right. And then you have the volume profile visible range, the one on the left, right? So there's two volume profiles. So I'm guessing you're probably using the one that is not necessarily... Oh, big boys are selling. Okay, interesting. Let's see if they're just going to drive it down to these areas. And then reverse again, which would give me an opportunity to scale in again. So we're still working within that 15-minute zone. We're coming to the edge of the entire range. And I'm going to increase this more just to see the big boys. I want to see the big boys. Alright, so there is a chance that we get to London the average session range low as well, and then reverse. So, and if not, I only lose, a small amount comparatively. Okay, so we're out. Now for the next trade, if this starts to reverse here, I am gonna go in with 2 lots with a basic 35 tick stop. So let's see. Usually when you have such strong move, they kind of do this thing where they smash through people's stops and then they reverse. So let's see if that happens. I need help of one of my other charts here. So this is now stop run from the other guys that were there. So I'm just going to concentrate to see if we get the move back up into the range. Hold on, my ninja got a bit stuck for some reason. Okay, nothing yet. People are still selling. So we want to see commitment of going back into the old range. So we have to go above 73.22. And we also have to see the bigger boys entering the market on the buy side. Right now we don't have that. Hey, lighters past this combine, I see. Very nice. Jayhawk says, Dee, can you talk about initial balance and how to use it? In a minute, I'm just talking this trade right now. And I've noticed that when I'm trying to get into a trade, I keep missing things. This is also the demand area from yesterday's London that we're reaching now. I can see it on my other screen. Storm has, Dee, I absolutely love your accent. Thoughts on gold. Again, we'll go over gold in a minute. I'm just going to wait to see whether there is some interest here. Okay, 15 lots times 2 has appeared. But now I need to see that they're not getting absorbed. So we need to have a reaction to that actual event. Otherwise, no trade. So far, these 30 lots that have come in as 2 lots of 15 have been absorbed. So that's kind of, I don't know how clear I can make that part of the reading the tape sort of thing. And, I find that this whole reading the tape, like, it has this whole shroud of mystery around it, but it's not really that mysterious. It's just having a level in mind, having an idea of what to do with that level. So in this area, I want to be a buyer. And then just waiting for them to do the same thing. And then if that doesn't happen, you either look to the next level or you turn to the single prints. Now, we still don't have single prints just yet, But if this continues to fall, we will have single prints. So you change your situational awareness depending on that. You will see that I've plopped in the ADR low at 72.33 down below. So that is, you know, that's something that they might want to get to as well if they don't turn it around here. So there's always a different hypos that you need to have in order to have some good trading decisions. But you will lose trades, you know. I mean, I at the moment only have about, what, 50% accuracy or something, so I will lose a lot of trades. But when I get my big trades, that's like 2 to 3 R, and I usually find them once a day, so we'll see. So far, no one buying here with bigger lot sizes. Still pushing with some force. Now, if we break 72.88, that will be the break of London's Asia low from yesterday. Sorry, London's Asia low. Asia low from Monday, okay? And that opens up that potential to go down to 72.33s, in which case longs will be off the table. But let's see if they can turn up. Whoa, okay, look at that. Some definitely interest here. 13, 27, 24, 13, 27, all buy orders. So I just need the price to react to that in order to get my entry. I am staring at a 1 minute chart on my other screen just to see that stop run reversal. So we've had a stop run through the previous London low and now through that Asia low just by a few ticks. So reversals should be on the cards, and if not, we leave it alone until I can find a way to limit risk, which probably won't be for another hour or so, because you need more data. You need single prints, you need an overlap of candles, low volume nodes, or something there that will give you some structure. So for now, even on a 1 minute chart, this is just kind of falling. All right, let's have a look at gold then while this is happening. I'm going to try and kind of keep focus on both of these somehow. Gold in balance. So let's switch to gold. Daily chart. Let's go. So gold is very much range bound on a daily chart. You always start with large time frame picture. So far, it's holding the supply at 25.39.3. If we start to go up into that area, I don't see the reason why this wouldn't rotate all the way up to the all-time highs again, or at the very least at 25.64.2, which is another high. But there is a chance that this is a distribution now. So it's basically went up, is distributing, might go into liquidation, but for now it's a range bound, so you know, range bound market, so you can just try to play the range, right? Going down to the 4 hour chart. Same thing, so it's slipping a little bit, making lower highs, but ultimately right now, this 4 hour chart is reversing. So if this holds, it will be time to maybe try going long, again with a view to rotate somewhere into this supply area. And then on a 30-minute chart to go a bit more granular. Let me just find my levels. We have an attempted move upside now in auction fade, but until the market is able to go below 25.34.2, which would be a London value high and the initial balance high, both of them are very similar. I would be looking for longs here, which is conducive to what you're seeing on a 4 hour chart. So effectively 25.34. One is a loose zone of about 20 ticks, 30 ticks, where you want to see either weakness around that initial balance high and value high, or strength coming back in, buyers stepping into the market. All right, I'm going to try another long on this crude, but because we've had this happening, I can maybe limit risk here. So 3 lots right off the bat for mean reversion, ping back. And we'll see whether they can push it. So we tried to go lower, but I did see some reversal on a very low time frame. And we'll see if we can get some momentum back the other way, because this was a huge, fast drop. And this would be more of a scalp. So if we get the reversal, typically mean reversions tend to be mean. They tend to happen quicker. So mean reversions are just moves resulting from very quick pings back, like an elastic band, to some sort of a middle of the range. And then we'll see whether the single prints are left behind or whether we get yet another massive buying wick, which would be best outcome here. But in 3 minutes, if we're sitting below this Asia low for Monday, that would be my sign to exit this trade. So clear-cut orientation points. Look at ES. Somebody wants me to look at ES. And this is where the dilution of focus happens. ES, sellers so far, yes, in control. Similar picture to NQ, actually. Similar picture to NQ. We're leaving single prints, right? So this was initial balance. Went outside of it, left single prints, and now you want to see whether it leaves a second set of single prints. If yes, you leave it for a trend day. If no, you bail. So it's always the same thing. The trading crude oil is more difficult because crude oil doesn't trend as much or as smooth as some people might want to see it. We had one, so if, what I mean by that, so you had one big move down, then one big move up, then chop, chop, then another attempted big move up, and then another short, and another big move down. So it's like, it's not, whereas, you know, ES, down, 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 right? So it's a very different market. Equities in general have more trends. This is why I like DAX, because it trends very hard. It just kind of, once it picks a direction, it just goes and stays there for like hours and hours. And also notice I'm not doing these trades in my live, right? So these are aggressive trading setups. For my live account, I want to see everything lining up. So one of the reasons why I didn't want to do a live trade here, because we couldn't claim VWAP, so I was like, this could go either way. And it's not a good enough setup for the live account, but it was a decent punt in a combine. So you have to weigh out the risks of each setup, probabilities of each setup, and all of that. So for now, they're not really stepping in. So all of these orders are not big enough for me to represent the ones that can really move the market. I'm still looking for those buyers. There's nothing for me here for shorts because I can't limit risk there. Wasn't able to limit risk to the opposite side either. Somebody is at the door, but I'm not able to get there right now. So we're going to leave that. So yeah, ES definitely sellers, but we may have some evidence of buyers stepping in here. However, in the context of the single prints that were left behind, I would be looking for now, until we still have the single prints left behind, I would be looking at this as a pullback on ES. Whereas on crude oil, because we only have one set and we're still not confirming the downtrend. In fact, we've built structure below the initial balance. So it's not the same for me. This is like a very different condition, which is why I'm still willing to try longs. If we had multiple single prints, so just one single print trail, and then this candle bringing another clean single print trail without building this balance, I would then be looking for shorts in crude oil. But again, I'm looking for buyers. We might be getting them now, finally, into the end of the stream. And then we're going to just have one last question, guys, and then I'll be out of here. Okay, so some buying happening, but they're all smaller, I think. So let's just decrease this for a while. Yeah, these are all now traders like myself, right? Ants on an elephant's back looking for the bottom. And you know, people say don't pick tops and bottoms. If you're picking tops and bottoms based on statistical probabilities, then you have a very good chance of doing it. But if you're just randomly picking tops and bottoms in light of multiple single prints, that's suicide. So here I'm just using the available, you know, information. But so far, big boys are still thinking down, because I'm not seeing anyone with more orders stepping in. Of course, you can have the retail community if you have enough people who are looking at the same side and looking at this as an opportunity to buy rather than, you know, some big trend day. You will still have the power of the herd, right? You will have lots of people doing ones that all add up to quite a bit of power. But, you know, that gets a little bit messy to read, and typically it's not super quick to reverse. Okay, so now you've had somebody executing 6-6-4-4. So somebody basically partialing the order. This is all usually the same person because it's happened like very, very quickly. So this would be a bigger player who has partialed the orders in several chunks to get a good fill across, you know, a zone of about 20-30 ticks from what I can tell. And here he is again, or here she is again. And can you see the difference in the speed of movement? When the retail guys were going 1, 1, 1, it sort of moves, then it doesn't move, sort of moves, and then this person steps in, 4, 4, 6, 6, 7, 7, 8, 8, and immediately price reacts. Now when you see that, but the price is not reacting, that is what we mean by absorption. People are stepping in, but they're not actually moving the price. That is what Nick Fortek and Hogue say. We're seeing absorption at these prices, absorption of buyers or absorption of sellers. So if I had seen an absorption of buyers at this level, I would leave this alone, because it would be like, yeah, they're stepping in, but nobody's moving the price. So they're absorbing the order stepping into the market. You know, I'm trying to make some of these concepts that give me confidence in entering trades demystified. So I'm not like, let me know, maybe we can dedicate tomorrow to this particular topic. But that is the gist. So you see big guys executing orders, you find your trade, and then effectively that's all you can do, right? You can then just hope that there's enough momentum to keep going. You can keep monitoring this, and sometimes you will keep seeing the big boys stepping into the market. But it depends what their, you know, what their goals are for this particular product. So for crude oil, you have a lot of commercial hedgers that are the ones that really move the market. And if you don't know what they do, it's basically people who are producers or users of the actual commodity. So in this case, it will be either crude oil refineries, right? Or you will be looking at airline companies, you know, cruise liners. They all need to limit their risk because they use so much crude oil, and they need to limit downside risk. So usually what they would do, they would come to the futures market and they would sell it to hedge their risk, right? So they always sell because they're, well, most of the time they will sell if we are in a normal market condition. Because they want to limit downside risk. That is the purpose of the futures markets, so that the producers or users of the commodity can limit risk. Zav says, Zav is one of my guys as well. He's a market stalker. Blatek SD shows all trends are down except daily, and we reached Q low on all time frames. Correct. So Blatek is actually telling you supply and demand trend based. So I'm not using the higher highs, low lows, zigzag or anything like that. We've actually coded up the indicator to show you the trend based on whether significant supplies or demands have been broken. That's how I look at the trend on a larger time frame. I don't really look at the trend as like, oh, we're making, lower lows and stuff. I like to look at the larger time frame picture depending on, are the supplies in control or are the demands in control? And if demands are in control, you can expect all supplies to be broken, and vice versa. If the supplies are controlled, eventually all demands will be broken too. To me, that's a better version of identifying a trend. And then obviously I also look at the trade location. So yeah, looks like we found a bit of a bottom here in crude oil. The question now is, can we close out the slight single print in E period from 73.10? It's not a big single print, all the way up to 73.19. So if we manage to battle through that area and we go higher into this range, then we may have a longer term trade, and I may even scale into this up to about 5 contracts, and then still keeping the same 80 ticks profit on this. But if we cannot close single prints, that will be a trade management tool for me. So it will be definitely a downtrend. And then the next stopping point in area of interest or targets is 72.33. So again, you're not freaking out. You're just looking at things very objectively. I mean, we still have bigger buyers stepping in here. So let's see if they can kind of keep pushing this. Michael S. is asking, again, how would you choose your filter size on ES? Again, exactly like I choose the filter size on crude oil, but it has to be a little bit discretionary. So you would start off by just putting all of them and then seeing what the bigger orders are looking like. So right now, I mean, this is out of hours for ES. So we have the biggest people in the last sort of few minutes, 10 and 18 contracts. So if you just want to see them, you would probably just go 10 and 18 contracts and then see how many of them are stepping in, when they're stepping in. You can see their areas of interest like this. We can't know whether these are new positions or old positions. So we don't know whether they're exiting or entering. But what we can tell is that at a certain price, 5,635.50 and 5,635 is their area of interest for some reason. So if you can then go back, work in reverse to go back to see why those prices might be of interest, then you have something going. So it's almost like working backwards. You see the orders and then you go, that's their area of interest. Right, what do I have there? And on ES, what do we have? At 56.35. Oh, look, we have single print. We have a bit of a gap, and we have a low volume node there as well. Funny how that works. So yeah, this crude oil, I'm going to leave it going and to see whether we can actually get a reversal. Like I said, I have my orientation point of 73.09 that needs to go to the upside if I'm going to keep this. If that goes, I'm keeping it for the full 80 ticks target. So we'll see what happens. All right, guys, I'm going to finish it here because we're like 8 minutes over. Not that it's like terrible or anything, but if you guys are more interested to hear about how maybe we can try to read the market tomorrow using these sort of engineered reverse levels from what we can see on time of sales, let me know. We can maybe make a whole session out of it. So ES, similarly, it has multiple single prints. If they manage to go over 56.35, similarly to crude oil, that will be then a fade of all of this downside move. But I think that these guys have got interest in selling this still at 56.35. So a loose zone, you can see they've all just plowed in around 35, between 35 and 36. So keep an eye out on what they're doing there. If they continue to sell around 56.35. You've got more trend coming your way on equities. Thank you for hanging with me today. You are going to have the broadcast, the main broadcast today. Now, I've seen that they're working on the improvement of the improvement of this stats thing, the performance dashboard. I don't see it yet. Okay, so I see just what I used to see always. So basically, what they're gonna have, see where you have the today. There's gonna be 3 dots there, and then you're gonna be able to select today, yesterday, and or last week, last month, I don't know. But basically, they're going to have 3 different options where you can see the period rather than having to kind of flip back and forth to see the previous week. So that would be very helpful. Definite improvement to the performance stats. Do I have anything else? So yeah, the main broadcast is going through as usual today from 8 a.m. Central. Enjoy that. I will see you tomorrow for another London session and then also for the fast markets. Take care, guys and girls.